Today, ladies and gentlemen, I am honored to be joined by Brett Reeves, head of the Go Network and European sales at BitGo, one of the most trusted and influential companies in the digital asset securities and infrastructure space. Welcome on board, Brett. How are you?
I'm very good, thank you. Thank you very much for having me today.
The pleasure is all ours. And like I say, given how influential BitGo is, I mean, they've been about since 2013. What an insight and what a testimony to BitGo to have survived in the crypto space for that long. And also your career and what's kind of led you to where you are today, working for this critical part of the cryptocurrency space in regards to a company. So with all my guests, I like to start off with a bit about themselves. How did you, having come from the traditional financial sector, end up working in the crypto space?
Yeah, look, my background's kind of 19 years in traditional finance, not to give away my age too much. And most of that was centered around kind of prime brokerage, interest rate swaps, foreign exchange, repo, and some custody as well. And I was living in Singapore until about 3 years ago, and it's when I was looking to move back. I was kind of weighing up options. It's very easy to stay kind of doing what you're doing and what you know, and the kind of traditional finance space is just kind of getting. It had been for a while, just being bogged down by more regulations, and I found, in the early days, very interesting. You're trying to learn about the industry, you're trying to create products and piece everything together, and in the latter years, it was more just explaining more regulations, more cost to clients, and things like that. And so I took it, I think like a lot of people, COVID was around. I kind of did a bit of a deep dive into kind of blockchain. And I was looking at how I could explore it. And, fundamentally, I was like, right, there should be so many more things on blockchain. Like, buying and selling a house in the UK is painful. Why can't we store the deeds and everything like that on a blockchain and make it more readily accessible? Buying and selling your car, just put, instead of bits of paper being sent to us for the ownership documents, just store it all there. And so kind of went down that rabbit hole and thought, yeah, this is something I could potentially transfer to when I moved to the UK, moved back to the UK. And probably would have liked to join a layer one, layer two, but will admit I didn't really know where to start with that. So I looked at what transferable skills I had, and that kind of led me to the prime brokerage world, to the custody world, and how people could store digital assets. And so, yeah, 3 years ago, I came back to the UK and joined a prime broker. And then I think it's about 14, 15 months ago, an opportunity arose at BitGo, kind of one of the OGs in the space, and as I saw it, a great opportunity to really get involved with a stalwart of the market and learn a lot more and try and push forwards.
I always find it very interesting. Whenever I ask people kind of what's going on here, it's quite a hard, in relation to the cryptocurrency space, it can be quite a hard question to answer because there's so many things taking place. Like if you look at the internet, for example, to kind of describe that in one word can be quite hard in regards to all the things that it's accomplished. I think crypto is very similar. And you mentioned there about house deeds, about car deeds and things like this. Actually, Paul Atkins at the SEC had a recent interview and he highlighted digital assets as being able to transform how that's done. So there's various different components to the cryptocurrency space. How would you kind of summarize with 1,000-foot view what's going on here? You've got Bitcoin, which has kind of introduced a new store of value to the world and the asset management arena. But the crypto space more broadly is doing many things. How would you kind of explain to people what's happening here? Big question.
Yeah, I think the 1,000-foot view it's a fundamental transformation of the financial services industry. I think that industry has been around for decades, and it's evolved over time. And whenever you evolve something, you tend to build on top of rather than start afresh. And I think that, having worked inside a bank, whenever you're trying to do any change, it's incredibly complicated because obviously you're safeguarding people's assets and the way people trade. You can't just make wholesale changes. And so we've ended up with kind of 80s technology being built on by 90s technology, by the noughties technology. And after a while, things tend to creak and not work as well. And whenever you want to make that change, it becomes very difficult. I think kind of blockchain has really opened people's minds to and how they can do this. And moving away from some legacy settlement systems. We're seeing what JP Morgan's trying to do internally with kind of JP Coin and Connexus and things like that. And so it's basically just a fundamental shift change. And I think it's needed for the financial services industry. I think it makes it more open and transparent. And I think it moves away from some of these kind of predefined costs that we had built into the system. And yeah, maybe it was COVID that kind of brought around the change, but it's meant that people have been able to take notice of it and be able to go and see how they can utilize this technology.
I think it's always important to remember that, because people can get quite sort of caught up in market action and speculation, and they can kind of lose fundamentally what's taking place here. There's something really transformational. I mean, even if you look at stablecoins, for example, and we'll come to BitGo's involvement in all that in just a second. Even if you look at stablecoins, for example, it's amazing the kind of costs that can be saved, certainly when you're talking about retailers. You know, with the Genius Act, it's no surprise that you're seeing everyone kind of set their face towards that. You're talking about fractions or fractionalizing the kind of expenses that are baked into all that. And that's just talking about utilizing money in an internet format, for example. Card deeds, identities, everything to me seems to be coming onto the kind of on-chain world. I think BitGo is going to play a very interesting role in that. And that's where I want to kind of pivot to. What do you think BitGo's role in all of this is?
Yeah, so it's hopefully at the center of all of it. I mean, I think, look, we've seen, to your earlier question as well, there are various different aspects of it. There's Bitcoin as a store of value, and it's kind of unique in the way it's been designed. It's blockchain as a technology to help with bringing real world assets on chain. And initially, that's just perhaps in a tokenized format, but I don't think it will be long before we're just seeing them be issued directly on a blockchain, because having to store something in custody in a traditional sense to then just mimic it on a blockchain and use it that way it's a good first step, but I think we actually want to see issuance directly onto the blockchain. And then you say you've got stable coins, you've got transferring value around the world instantaneously for a fraction of the cost. So hopefully we're going to be involved in all of it. We have the technology there to be able to do this. So just to recap, we started as a wallets company, back when Mike Belshie set up the company, looking to store Bitcoin essentially. Decided to pivot into the institutional custody space, kind of, I think, 6 years ago with our first trust company. We've now got 7 regulated hubs globally. So we really see that clients want choice. So there's a client in Europe that needs to be, MiCA compliant. We've got an entity, BaFin regulated, MiCA compliant, ready for that. We've got 2 different entities in the US to be able to look after people over there. Singapore, Dubai, a joint venture in Korea with Hana Bank. So really trying to say, wherever you are in the world, wherever there's a hub that you want to use, it's available to you. And, initially that's looked at token support. 1,200 tokens, I think 88 of the top 100 tokens being stored by us. That's all fantastic, right? How do we look after crypto as it is today? We've then got another company which looks after the foundations, when new chains are being launched or new tokens are being launched. We can help run a token management platform for them and their investors. So now we're starting to move into kind of real world cases. So as more of these new foundations start up that are looking at real world applications, we can now support the issuance of their token from scratch. We've then got the real world assets piece. We've got an entire arm looking at this. In the US, it's a strong point of ours. We can help actually issue the real world tokens. We can custody the existing tokens, issue the on-chain tokens. And so it really is now an all-encompassing service that really looks after the way people want to do that. We've then added in trading. So most people just know us as kind of custodian, looking after assets, but we've now got a fully functioning, electronic trading desk that's been running for over 12 months. That's taking in some of the top liquidity from LPs and exchanges and providing it to our end clients. They don't necessarily want to bring assets on chain to be able to swap them out for either other tokens or for fiat themselves. So they can now do that seamlessly, accessing incredibly tight liquidity. We've got an OTC desk. So for the less liquid tokens or for more of those block size trades, they can come to a desk and get a white glove service to be able to run that. borrow lending as well is now introduced into that. So we're really becoming more of that all-encompassing custodian that you would see in traditional finance, whereby we custody the assets, we trade the assets, we'll lend them, and we're really trying to do everything. When it comes to then stablecoins, we've got to launch one of the big stablecoin launches in recent time in US dollar one. That technology can be used by anybody. So if there is a bank out there looking to launch a stablecoin or a country that's looking to do it, we have the fundamental technology for them to be able to go and seamlessly implement this in a short period of time and launch their own stable. So as we see that progress, I think there's going to be some further changes as well. But as I said, hopefully BitGo has got all of the right kind of pieces of technology in place to really be at the heart of this going forwards.
There's quite a lot to take in there, and I want to explore some different areas of that. One thing that I just want to highlight in regards to as a whole, there's a lot going on there for one company to achieve. Do you think that part of that being possible is due to this technology? I mean, you look at, let's say, Tether, for example. I think they're the most profitable company per employee to ever exist, I believe.
Yep. Yeah, I think that's correct.
Now, that is only literally achievable through this technology, right? Do you think that with everything BitGo's got going on, that a lot of this is possible in regards to the breadth of services that you're offering because of how distributed ledgers can kind of unify everything? They can make the whole process a lot more easy in layman's terms.
Yeah, I think part of it's the blockchain technology itself, but I think it's also the heart of where companies are being formed now. I think if we look at banking as well, you see a lot of fintech banks that are disrupting the status quo. And that's when a company sets up now, there's so many more tools available to them to be more nimble and more flexible in how they operate. And that never used to exist. Go back 20 years and the internet's still in its infancy, really. And we see it, that has enabled any new company to kind of progress at a much more rapid scale in a much more efficient manner. And we're only just starting to scratch the surface of AI, and look at what that's probably doing for new companies now. It's just accelerating the adoption.
Even in regards to banking apps, somebody that's ran a company, I mean, we can't attribute everything just to distributed ledger technology. There's some major unlocks the internet's brought, certainly AI. Even in regards to banking now, with accounting softwares and things like this, the world's just simply more enabled really through technology, and that's only going to progress. And it's, I'm very excited to see where we are in sort of 10, 20 years. I want to pick up on one thing. I want to pick up on a couple of things, but one thing I want to start on is you mentioned BitGo in regards to real world assets. So I think we all agree that it makes sense for most things to move on chain. It's easier to account for these things. It's easier to do transfers, fractionalizes costs, storage, so on and so forth. You mentioned that BitGo actually offers the ability to do the tokenization of these real world assets. Could you maybe expand on that a little bit? Are you leveraging distributed ledgers to do that? That's a very interesting service you guys are offering.
Yeah, so we, through an acquisition we made a few years ago, we have the kind of relevant licenses to be able to essentially take, what we were originally looking at was kind of less liquid assets that we wanted to be able to help tokenize and bring them on chain. I think we're seeing that evolve, and whilst that's still definitely a use case, we're actually seeing more liquid assets actually being made available this way. So yeah, the very simple way is we can store the underlying asset and then essentially be able to tokenize it and distribute it ourselves. So we've done a few partnerships that are out there with companies like Republic. We've helped them take some of their kind of real world assets and help tokenize them. So it's basically an all-encompassing engine that we'll be able to take it from point 1 to point 10. Instantly we'll be able to support the asset, and then those companies have essentially digitized their form. I think, does everything need to be tokenized? Probably not. I think it will be in the future, and I think for the existing providers, the main custodians that we see looking after the actual securities themselves, they've probably got a bit of an inflection point to go through. There's probably some near-term cost. It's probably going to be more expensive for them to do this in the short term. they have to adopt the technology, they have to change the way they're operating. So there is going to be some pain for them, but I think it comes with longer term saving. Maybe it's like what's the example we always get here? Installing solar panels here. There's an upfront cost, and when's your payoff going to be? It's probably going to be after a few years' time, and then actually everything will be much cheaper for you, and they'll be able to issue the assets directly onto the blockchain rather than having this kind of real world security first.
And I think this is sort of a good point to talk about where we are as a whole in regards to what's coming. Where do you think we are in regards to the kind of DLT transition? Do you think we're right at the start of this? I mean, it seems very kind of apparent that that's the case. I think, we've gone through a lot of trials and tribulations to get here, and anybody that's been in the crypto space for a period of time will know that it's kind of like dog years. So it feels a lot longer to get to this point than it actually has been. But where would you say we are in regards to that kind of arc of time of things, in regards to stable coins, real world assets, generally the world embracing this technology?
I think we're still pretty early. I think let's not forget that we've just gone through kind of 4 difficult years with the last kind of administration in the US. And I think what the industry has been having to battle against, that's now been unleashed. The shackles are off. We've seen, as recent as this week and last week, with things like the Genius Act and banks are not going to have reputational risk against them if they start looking after custody assets. I think that was yesterday that was announced. We're now seeing people really trying to adopt this and move forwards a rapid pace. I think the first piece is stablecoins. I think that's, and specifically, as we move into yield-bearing stablecoins, that is the probably easiest pick up and play piece. It's obviously holding dollars or treasury bills or something like that in a bank account and issuing a stablecoin against it. It's a simple model. Tether obviously has led the way. There's other companies that are there and new ones starting every day. I think we're going to see a boom of stablecoins, and then I think we're going to see them kind of retrench a little bit. Not everybody's going to be successful. It's incredibly difficult to launch a stablecoin. You need to get many different parties there to be able to make it work for you. As I say, I think there'll be a lot of people dipping their toe, and then I think we'll see some pullback, and there'll be, I don't know whether it's half a dozen or a dozen different providers globally, but it will kind of shrink a little bit. Because that's the easier part, I think the tokenization piece is more complicated. You have to adhere to securities world rules for obviously the real world asset itself, and then issuing it on a chain. So still at the beginning, but I think it's going to be rapid, the kind of evolution of this.
And before we get into the Go network, and of course your role in that, and we explore that in a lot more detail, it's obviously been quite a tough 4 years for the cryptocurrency space. BitGo throughout that time period, to me, just seems to have gone from strength to strength. I always look at, not necessarily, I don't think price action, and we're not here to talk about that, really correlates with fundamentally what a company's doing. From an outsider's looking in, and we've got you here on the channel, when I look at BitGo, you guys just seem to have been going from strength to strength to strength in regards to partnerships, in regards to what you're actually doing, usage. Could you perhaps confirm that? BitGo has really been going and doing a lot during the 4 years, and certainly now, given where we're at from a kind of legislative point of view, certainly within the United States, what are you seeing right now? Are you seeing a kind of rush towards the door in regards to companies looking to embrace this? And is BitGo kind of getting inundated? I know it's a very busy time for you.
Yeah, look, this a lot of this was before my time at BitGo, but I think Mike and his broader team did a fantastic job of obviously navigating kind of, as it's called, crypto winter. It was a difficult time for everybody. I think having already been in this space for a long time, I think that helped position BitGo versus a startup coming in. They obviously would have found that much harder. I think, like a lot of companies, they put their head down. They were building. During that time, we've seen BitGo Europe as an entity and a hub set up, and then moving into Singapore. And those weren't decisions that were just made overnight, right? They were being formulated during that kind of crypto winter, and with a view of coming out of it and being able to really push forward on a global level. Testament to what the teams have done before my time here. I think that's only going to continue. I think we're seeing a huge influx of different client types. It comes with kind of being an OG, right? We have many different client types, whether it's from a nation state to an asset manager to an ETF provider to a hedge fund to a corporate and so on. And I think one thing that the decision they made was a while back is kind of practice what you preach. We decided as well to have some Bitcoin on our balance sheet. And so when we see these corporate treasury plays now, the fundamental direction of BitGo was the belief in Bitcoin as a store of value. And so a portion of it was dedicated to that as well. And so, we benefit, but it's not just a benefit for us. We actually now can educate clients around this. And we're seeing, the micro strategies of the world and the meta planets. And in the UK, we've seen, I think, 10 companies in the last 2 weeks suddenly announce they're doing Bitcoin treasury plays. So
Wow.
I was just in the Nordics. There's a few up there. And so we really are in a position to be able to kind of help those. That was the fundamental basis of kind of when BitGo was born. It was around custodying Bitcoin. So we're in a very good position to be able to help there. I think more broadly, as we've moved into financial markets as well, it kind of diversifies the company in the different streams that we have and what we want to do going forwards.
Yeah, and this is going to bring us perfectly onto Go Network. Now, many people might be unfamiliar with Go Network. You're, of course, the head of Go Network for BitGo. Maybe you could give us an introduction to what that is, because I think when people kind of understand it, they're going to see the broader picture in regards to just another element of what BitGo are actually trying to facilitate.
Yes, there's two kind of core underlying themes that I'd say Go Network encompasses. One is this kind of DVP settlement that we operate. So any two BitGo clients can instantly settle with each other, either kind of on a one-way directional basis or on a two-way. So what I mean by that is I could just seamlessly send to you Bitcoin or even US dollars into your BitGo accounts. There's no fees associated. It's instant 24/7 in cold storage. The other thing is I could, maybe we're OTC providers. We could do a trade. I want to send you 100,000 Bitcoin. You send me, $100,000 and you send me 1 Bitcoin. I can tee that up and then you will see it kind of on your system and you'll say yes. At the point you say yes and you agree that to those details of that swap, it will instantly move the assets from one account to the other. So we remove counterparty risk. There's no waiting for you to pay me first and then receive the assets later on, which is what we see a lot in crypto. And it's kind of strange. Although having introduced new technology, we've actually gone backwards a little bit by introducing that kind of counterparty risk, or Herstatt risk as the FX market would know it. So that's one very simple fundamental. The other is then kind of reducing exchange risk or other counterparty risk. So we've branched out into kind of off-exchange settlement. We've just announced a few different exchanges that have come on board. We already had some there, and we're looking to rapidly scale this. We also have a partnership with Copper, who is one of the first kind of proponents of the off-exchange settlement process. And we're really looking to say, hey, look, there's an institutional adoption coming in here. They may or may not want to take direct exposure to some of these exchanges. So let's help hold those assets in regulated custody and effectively mirror those assets onto those exchanges. We want to help bring more volume and more liquidity to those exchanges by doing it by introducing more new entrants into the market. So really good relationships with a number of different exchanges. We're trying to bring on board as many as we possibly can. And then the other piece is kind of the ECN flows. So ECNs are electronic communication networks. They're very common in FX markets, very similar to central limit order books or CLOBs. And so we've got some of these market actors in place. So it could be a finery markets or a crossover markets, depending on how they want to set up. We're basically trying to give clients as many routes to liquidity as possible, including our own desk, to say, hey, come and securely store your assets, but come and trade wherever you need to trade and settle whenever you need to settle. And I do think that, the crypto market has done incredibly well, but we're just the tip of the iceberg at the moment. And, when the traditional entrants come into this space in anger, the volumes will increase, and that's what we want to try and help facilitate.
I think it's very interesting, what Go Network is doing, because it's needed for crypto to kind of merge with that traditional world that I think we'd all agree are coming. And when you talk about providing liquidity, and when you talk about providing these solutions that are going to be needed for that kind of volume that hopefully in the future we're going to be looking at processing. What is that liquidity, do you think, going to be in? Do you think you're providing this in regards to crypto swaps? Maybe you could talk about the actual assets that you're looking to provide services or these products for, envisioning this sort of institutional volume that's coming. What do you think is going to be popular in regards to that world as it relates to crypto?
Yeah, it's interesting. There's, we've seen some very traditional names come in and start testing by buying some interesting coins, I would say. They're not necessarily the top 10. I'd say most are kind of looking at that top 10, top 20 kind of range. We have seen some outside of that. I'm not saying they're buying them in anger, but maybe just testing the water. It's very interesting to see, and hopefully that continues. I think we're going to see a bit of a shift. I think initially it's coming in, it's trading, Bitcoin, Ethereum, Solana, going down that chain. We'll see that kind of access, perhaps mirroring some of the ETFs as well. There's obviously going to be a natural arbitrage trade for some people there that they're going to look to explore. I think over time we're going to see that navigate away into stablecoins. That's being used for a lot of kind of trade already around the world. I think we're seeing a lot of commodities firms, shipping firms, and so on start to adopt stablecoins as well. So there's going to be greater demand for trading into those stablecoins, and we see that we will be a key proponent for that. And then it will look more towards, I think we're going to see kind of as we say, the on-chain tokenized format, but that could be a few years away. I think one of the things I think I'm very interested to see, having come from a prime brokerage background, is how people will now start to look for efficiency in these markets. Previously, spreads in crypto were very, very wide. People could make money quite easily. As kind of more players have come into the market, and as the volatility has tightened, and I'm not saying disappearing because it's still there, but as it has tightened, we're now seeing how people can actually utilize collateral in a much more efficient manner. So part of our prime services desk is tri-party collateral. That could be for OTC providers, for options traders wanting to hold collateral in a trusted third party. Historically, has that just been done with Bitcoin? Very easy. Everyone liked the store of value, and that was the easiest piece for them to do. I think now people are actually going to look at that and say, well, can I use a yield-bearing stablecoin? Can I actually earn 4 or 5% on that collateral being held and actually put the BTC to work somewhere else? And we're exploring that both not only for our tri-party kind of products, but also for our off-exchange settlement. So it could be that someone pledges $10 million to an exchange, but that asset just sits there, and then there's a settlement once a day or a couple of times a day. If we can now provide them a yield-bearing stablecoin, when there's then a settlement due and they need to settle in the underlying, if we can auto convert that yield-bearing stablecoin into that underlying asset and transfer it, you're now starting to get kind of margin optimization, collateral efficiency kicking in, which is really what we see in the traditional sense. And that's where you're going to see the big mainstream hedge funds sit up and take notice and say, okay, this is interesting for us to come and dabble at.
And developing this product, what would you say gives you confidence? I mean, you'll have a way better understanding of this than I do. Institutions are obviously very interested in embracing this technology from a number of points of view, one as an asset. What gives you confidence in regards to what we're sort of looking at and how BitGo is positioning itself actually coming? Why do you think institutions are going to come into this sector? Maybe it's because we're seeing that already, but in regards to the kind of big catch, if you will, and institutions flooding into this, bringing that volume, looking to create products around some of the services that you're offering, whatever it may be, what makes you confident that that's coming?
I think the ETFs are probably the first milestone in terms of seeing and understanding that traditional finance companies, hedge funds, asset managers are moving into this space. Obviously, IBIT is the most successful kind of adopted ETF ever in history, the fastest growing. You probably know the stats better than I do. But it's when you then see who's been buying into that where it becomes very interesting. And there are a number of institutions readily available that you can see that have moved into that space. I think when you see some of the very large asset managers that issue those ETFs start putting out narrative, and when I say narrative, I mean actual adverts saying, Bitcoin might be a hedge against a government or currency or something like that. That's the point where you knew this was not going away anymore. And I think now with the Genius Act being passed, it makes stablecoin enablement much easier. I think perhaps there needs to still be a few more tweaks to that. I'm not an expert on the US side, but looking at the kind of interest part of the stablecoins and how that can be issued potentially needs to be addressed. But as a starting point, is absolutely fantastic. In Europe, MiCA was issued. You've got clear guidelines around crypto. We may or may not agree with them, but at least it's a starting point, and we have a place where we can see that we're allowed to operate on these markets and trade. So you've moved from just an ETF issuance to regulation in Europe, regulation in the US, and that's only going to keep being enhanced as we move forward. So that's why I think we're confident that this is moving forwards.
I think there's just confirmation everywhere, really, isn't there? The Bitcoin ETF stats are truly shocking. I got into this industry in 2012, and to kind of be here now, I'm kind of going. It's almost too good to be true, really, isn't it? In some senses, and to watch the space evolve, to watch all the sort of infrastructure players like yourselves, and you're far more than that. You're, of course, talking about Europe, the head of kind of European sales. How's that been?
Yeah, busy.
Yeah.
Look, and it's interesting. At the end of last year, MiCA was adopted on the 1st of January. We were coming into kind of Q3, Q4 last year, saying we've got German entity. Europe is headquartered in Frankfurt. We wanted and we want to be regulated in the most high quality jurisdictions we can. So Singapore, Dubai with VARA, Germany. It's not straightforward getting regulated there. But that's kind of the point. It's not meant to be easy. You're meant to be tested, and that's to give the end consumer the kind of confidence that you are acting in the most appropriate manner, especially when it comes to custody and safeguarding people's assets. So towards the end of last year, obviously there was we didn't 100% know where certain MiCA regulations were going to go. As December came around, that crystallized for us with BaFin. And we were extremely pleased, I think about 2 months ago, to get our MiCA approval. It's a landmark. I think we're the first kind of custody, true custodian to get that. And it's kind of testament to the work done before my time of setting up that entity and navigating Europe. And let's not forget, the UK might not be part of Europe, but we all remember and know how it operates. It's bringing together multiple nation states to try and agree on a framework. It's incredibly complex and difficult to do. So very pleased to have that. I think we're seeing it's a slightly different demand than the US. I think investing in general in Europe, from a retail perspective anyway, is slightly different. The mindset around the 401k in the US is not the same in the UK and Europe. Like the way we look after our pension funds, we don't talk about it at dinner and on a daily basis, things like that. It's just a different narrative we have. I don't know whether it's culture, but the stablecoin play maybe isn't the same. The US dollar is the kind of global currency, and so it makes sense for that to be dominating as a stablecoin. I think where a euro stablecoin makes more sense is maybe we see euros, I think, dominate in trade finance. So we're having conversations around that. We're having a lot of conversation around the kind of Bitcoin treasury plays at the moment. And I think it's a different type of market that we're looking at. We're seeing a lot of kind of retail brokers, the kind of, whether they're traditional or kind of the fintech retail brokers set up. And, we help kind of, I say bank, but, custody a lot of those assets. So it's a different marketplace, but it's very busy, it's thriving. I think the financing world is quite strong. We're seeing everywhere from Portugal, Spain, France, Italy, and the Nordics all have kind of different ways of approaching this. My team was in Prague last week for Bitcoin Prague, which obviously follows hot on the heels of Bitcoin Las Vegas. you've got Michael Saylor coming over. You've got Jack Mallers there. It's incredible. 12 months ago, would you have dreamed of that? Probably not. And so we've got mainstream kind of people in the industry coming over to speak in Prague at Bitcoin conference. And so I think that adoption is coming through more and more.
I don't think there's ever been a better time to be in the cryptocurrency space than right now. Certainly as a whole, I think it's. I have to think when you look at what the majority of retail and I am retail are saying and what their sentiment is towards the cryptocurrency space, it can be quite telling because often you should look at the opposite. There's a kind of fatigue, I guess, in regards to everyday people partaking in the crypto space, perhaps from an investment point of view, which I think is understandable given the past 4 years. But I always say this to people, look at what's taking place. Look at what the likes of BitGo are doing and who they're working with and who they're bringing into this sector. There's never been a better time to be involved in crypto in whatever element that may be than there is right now. And I think you guys are an absolute testimony to that. I know you're working on the Go network and things like this. Do you actually work specifically with any kind of layer ones out there? Are there any kind of layer ones? I know BitGo, of course, is a Hedera Hashgraph Governing Council member, for example. Do you guys work with a multitude of, and I would imagine this to be the case, DLTs out there directly through foundations and things like this? How active are you guys in that space in regards to working with industry players?
Yeah, it's a huge part of our business. At the start of the year, obviously, we looked at where we wanted to kind of focus resources. As you do every kind of 6 to 12 months, you look at where you're going to go. And we actually have an ecosystem team that's sole job is looking at foundations and how we can launch new chains. So, supporting 1,200 tokens across, I think it's 45 chains at the moment, is no small feat. And essentially what they did was they've now built that team to be able to scale to different projects. So, launching an ERC token, 20 token is relatively straightforward. It takes a few days, depending on resources. Launching EVM compatible projects, we could be looking at anywhere from 4 to 8 weeks for that, depending obviously on the complexity and what they're doing. Are they running staking as well? Because that could be something else that needs to be factored into there. To running completely new native chains. So if we look at kind of recent launches, I think probably Berachain's the main one. They're supporting the likes of WorldCoin, Sui, Say. We've effectively those. We've got, I think Bitensa was obviously recently announced as well. There's a whole pipeline for the rest of this year of kind of what's going to be launched. And so that team is integral to the wider BitGo ecosystem. We build to that chain. We can then custody their token. We can run token management. So for the investors and the employees, maybe as a 2-year vesting schedule, 3-year, they'll be locked up in cold storage custody. And as they vest, they will be available for the different holders to be able to withdraw them. But if they wanted to sell them, they could come to our OTC desk and say, hey, can we get a price for this? Never need to bring them on chain. And we would deposit dollars or fiat into their accounts directly. So it really is the whole front to back piece of that ecosystem team really does help generate business for the rest of the company. As I say, we then throw in staking as well. We start staking these products. That's become an integral part of our business as well. So you'd be surprised at an amount of people that don't actually stake assets. And so we're trying to help educate people. Some people might be scared of staking. What is it? Could my assets be seized, or what's slashing? Whatever it might be. It really is an educational journey to take them from the basics through to much further down the chain.
One thing I also think BitGo are really good at is education. That's a big part of it, certainly given where we are right now. If people are going to adopt this, I think there's a great sort of wealth transfer as far as a trickling down into to digital assets, which, I mean, do you think digital assets are a kind of new asset class? How do you view that? Just as a personal kind of question. I think, because I often wonder, like, is this something new that's going to find itself? Maybe that's what Larry Fink was talking about, where he mentioned a different 20% in regards to the 60-40 split. He's introduced a different kind of dynamic to how that split goes. What do you think this is? Do you think this is a new asset class broadly? I mean, Bitcoin, it's kind of maybe mirrors an old one in some senses, but in a different format. It's quite a hard question, but on a personal note, what do you think about that?
Yeah, I can't say I was a Bitcoin maxi when I came into it. I was intrigued, and I could see the points around it being a store of value, and there's 21 million coins and so on and so forth. But I think as time has gone on, you look at that and you're like, yeah, I get it, and I follow it. And it is arguably a better store of value than gold, which we can dig out of the earth and everything like that. So do you believe that gold is a kind of safe haven asset to invest in when there's problems in the world? If yes, then you should really be looking at Bitcoin in the same light. And so, I think Bitcoin itself probably needs to be segregated from the rest of crypto to an extent, because it is quite unique. And maybe there'll be some other kind of copies, and maybe they'll be able to fit into that regime. I think Bitcoin is, it's the OG, it's where it all started, and so I think it'd be very hard for anyone to ever displace that. But maybe there'll be some others that come into that. I think the other assets, personally, I think Ethereum gets a bit of a hard time in the market when it's being traded. You look at the amount of projects that are built on Ethereum, I can't see that going anywhere. Okay, people will chip away, but again, it's kind of the original layer one that really helped the entire community start. So there's, when you look at kind of issuances and where new tokens are launched, tends to be on Ethereum somewhere. Solana's making inroads, Sui, the others. I think as an investment, it's hard for somebody. Humans intrinsically don't like change. It scares them. And I would say to someone, look at Bitcoin first. Don't go over your skis, but at least start looking at this and maybe adding some of that to your portfolio. And frustration for me up until maybe 2 weeks ago in the UK was I couldn't really buy it for, say, my children as a kind of as a play. I could buy it, I could store it on a device or with BitGo or somewhere else, but what happens when something happens to me? How do I actually pass that on? A much more efficient way would have been for me to buy an ETF or an ETP, put it into their kids' ISA, and then I know that it's looked after. It's also tax efficient and everything else. And so there's probably Bitcoin maxis, giving me death stares right now, but there's a place for Bitcoin for everybody. I think the ETFs have been an amazing vehicle for people to be able to access it when otherwise it was proving difficult. I think when it's for something like an inheritance purpose, it's something we trust and know, and it's going through a company we know, that's great, especially for tax purposes. So I think there's an element where that exists, the ETFs, the ETPs, and in the UK we can now get the ETNs, or about to be. And then I think there's a place for Bitcoin as a pure token for be able to hold and so on. So I think it probably deserves a place in people's portfolios. I think the model portfolios show that. I think even if you just look at this year, it shows it. And I think every year it's just going to get stronger.
That just excites me. I mean, it truly does, because if you look at the arc of where we're potentially going with this, and I agree with you, I think it should be, at least have a place, certainly when you talk about alpha and things like that, it makes sense, right? I think it's always a hard question to answer more broadly outside of Bitcoin. Yes, Ethereum, but then you're really getting into the realms of what still I think most people would look at as very risky. Talking about, because Bitcoin has that clear, I think, narrative in regards to it as an asset, right? You look at gold, Ethereum, okay, you can see it. But when you sort of venture outside of that, and I wonder, I'm personally very excited about things perhaps outside of that and the broader application of DLTs, but it can be very hard to kind of answer questions in regards to them as assets. We certainly don't have really good regulations even perhaps around that. I mean, we have the FCA announcement, by the way, I think we're all over the moon about allowing ETNs. It's crazy that we couldn't get access to that, but you could buy on an exchange. An exchange, it's actually cheaper. We speak to a lot of the leading ETP providers in Europe, ETN providers now here in the UK, and even ETF providers. It's crazy that actually you can get exposure to an ETN or an ETF or an ETP cheaper than you can buying directly on an exchange to that asset. It's cheap. It's cheaper to do it that way, right?
Yeah, yeah, it is. I haven't done deep research into it, but I have seen that in a few places. It is probably cheaper to be able to access it that way.
But of course, you lose the self custody. I get the maxi stairs, def stairs, but it depends why you're here, really, doesn't it?
Correct. And for me, I think whichever way you're buying Bitcoin, that's a good thing. And so it might not be the purest view, but I think we do need to take a practical approach at times. And as I say, if something happens to me and it's stored somewhere, how do I get that out? Okay. If you're using a custodian like us, yes, there are ways obviously to be able to look after that. But if people don't even know that I have that custody account and so on, it makes it more difficult. And some people are probably still a bit nervous. I think that's changed a bit, but imagine going back a year and maybe you didn't want to advertise that you held crypto and all that to your friends because they'd be like, "What are you doing? You're crazy. You're gambling," so on and so forth. So, I think that one of my fun kind of phrases always lead up to Christmas. And 2 years ago, lead up to Christmas was like, "Oh God, they're gonna be, what job are you doing? You still in that? What nonsense." This Christmas was obviously a bit different and a bit more positive, and I think that 2025 Christmas will be even better when you go home and have that Christmas dinner and people speaking to you around it.
Yeah, you're going to be moving up and up the dinner table to an actual favorable position. I know exactly what that's like. I've got two brothers that are in traditional finance, so I'm kind of the black sheep of the family, if you will. But I think the tables will turn, and I'm getting more and more questions as the years go on. And actually, as far as real world assets are concerned, there's huge interest in that from them right now, and some of the companies they work for. But what I really want to sort of close on is a 12-month prediction. It can be hard to predict a week down the line in the cryptocurrency space, certainly with everything happening geopolitically. But in 12 months' time, what do you think this space kind of looks like? Do you think those institutions have entered, or more of them have? I mean, just generally, what do you think is going to happen in sort of the next 12-month time?
Yeah, so I think we've already seen it in the UK, kind of IG Group moving into crypto now and offering that. So I think that's a traditional company that's moving into the space more than a fintech. So, we have the likes of Revolut and other companies there, the Robin Hoods and so on. I think that's the first entity that's going to start moving into this in a more meaningful way. It's that kind of retail broker type platform that wants to make sure that they stay relevant to their clients. Our crypto as a service product, so we custody or we look after a number of the top exchanges in the world. The same principles can apply to any bank or broker that wants to go and use our services. They can spin up hundreds of wallets, hot, cold, multi-sig MPC, whenever they want, all API driven. I think that enables them to be able to move into this space, and they'll be the ones that move first. Discussions with banks are taking place. They are going to be more conservative, I think, in Europe specifically, and I think we do need to distinguish this regionally. I would say that the ECB is still not fully behind crypto in the same way that the US is moving. And so when you go and speak to a bank in Europe, they're still a bit hesitant because they're concerned about their regulator and so on, which is very understandable. I think in the US, you're seeing a much bigger push into this. So I think you'll see the mainstream kind of US retail asset managers really start to dive into this and start offering solutions to their clients where they can click and trade and store through them. Europe will come slightly later. I think Asia is probably in between the two somewhere, or kind of Middle East and Asia in terms of where they are with those products. That's where I see it for kind of crypto native products. I think the banks and kind of tokenization, real world assets, that is moving forwards. It's still dipping their toe. They're still going to have to adjust, change systems, architecture, be able to pull it into their kind of central banking framework. But that is definitely moving ahead at a pace. And we can see, JP Morgan is kind of trailblazing with their Connexus product and what they're looking to do there. So everyone will follow. If they do it, it kind of gives people the signal that they're okay to move forwards, I think. And they are exploring this and they're just seeing how they can scale quickly.
I think the dominoes are well and truly falling at this point. Brett, it's been an absolute pleasure. I really want to thank you on behalf of myself and my audience for your time. We love having people like yourself on. BitGo is an extremely, I think, fundamental company to the cryptocurrency space, now the traditional financial sector. We love that you're obviously a part of that. And I've personally really enjoyed listening to you and extracting some of that insight that you have. So a massive, massive thank you for your time. It's been an absolute pleasure.
Cool. Look, thank you very much from all of BitGo. It's a pleasure to be on, and thank you for what you're doing in the space as well. I think there's been a few lean years where we've needed information to be out there, and it's people like yourselves that have been able to do that. And hopefully this is fruitful and beneficial for everyone going forwards.